What if I told you that some of the biggest pumps in crypto right now are not coming from some widely popular narratives and sectors, but from decentralized exchanges? That's right. A new wave of DEX tokens has exploded, and traders are rushing in. We're talking about Aster, Avantis, and of course Hyperliquid, all of them making insane moves. But the real question is this the start of a major shift in crypto? Stay with me because today I'll break it all down. Welcome back to Captain Altcoin. Today I'll be talking about one of the most exciting storylines in late 2025, at least in my personal opinion. DEXs are finally starting to become popular, not just from DeFi nerds, but from everyday traders. We've seen insane rallies in tokens like Aster and Avantis, while Hyperliquid continues to dominate the on-chain perpetual scene. Even old names like DYDX, Uniswap, and PancakeSwap are back in the conversation. Now, before I continue, just a quick reminder, nothing I say here is financial advice. I'm just sharing my own views on what's happening in the market. Always do your own research before making any moves. And if you enjoy content like this, hit that subscribe button, drop a like, and let's keep growing this channel together. So let's set the stage first. Grayscale released some research earlier this year showing that DEX volume has jumped to about 7.5% of total crypto trading. That might not sound like much, but it's more than double what it was back in 2023. So we're clearly seeing momentum here. In my mind, what's happening is simple. More and more traders want the speed and transparency of decentralized platforms, especially for perpetual trading. And when that demand collides with new tokens launching, with big exchange listings, and with whale speculation, you get exactly what we've been seeing: explosive pumps. So let's start with the one that's been leading the charge lately: Hyperliquid. Hyperliquid is not new. It's been around for a while, and it's already one of the top on-chain perpetual DEXs. But just recently, its token hype absolutely exploded. It hit a brand new all-time high around $60. That's about a 40% move in a single month. And it crushed Bitcoin and Ethereum's performance over the same period. In my opinion, this wasn't random. Hyperliquid has one of the strongest token models in crypto. 97% of trading fees are used for buybacks and staking rewards. That means real value flows back to token holders, and that's something traders love to see. On top of that, whales have been loading up. We're even hearing rumors of big institutional interest, with some insiders saying Hyperliquid has billions set aside for buybacks. And then there's the rivalry. When CZ, yes, the founder of Binance, posted a chart of Aster with the simple "keep building" message, everyone took it as a shot at Hyperliquid. And honestly, I think that little nudge lit a fire under both tokens. Hyperliquid showed it's still king, but Aster stole some of the spotlight. And that takes us to the next part of the story. Now let's talk about Aster. This one is crazy. Aster launched just a few weeks ago, rebranding from Apollo X. And in literally days, it pumped over 800%. That's right. From its launch, it ripped straight up to more than 1.3 billion in market cap, and quickly after that to over 2.5 billion. Trading volume hit over $1 billion in 24 hours. So, why did this happen? In my view, it was the perfect storm. First, Aster has connections to YZI Labs, which is backed by ex-Binance executives. CZ himself gave it public support, pointing out that Aster became the biggest non-Binance holder of BNB chain USDT. That's around $130 million in stablecoins sitting in its reserves. That kind of signal gives retail traders confidence. Second, tokenomics played a huge role. A large percentage of supply is earmarked for airdrops and rewards, so supply was really tight. Third, and this is where it gets wild, I saw massive short squeezes. On-chain data shows one trader who shorted 350,000 Aster had to inject 2.3 million USDC just to avoid liquidation. Imagine the pressure when shorts are forced to cover at the same time whales are quietly accumulating. That's how you get parabolic moves. Now, is there manipulation here? In my opinion, we also have to talk about the whispers of manipulation around Aster. Some analysts pointed out that more than 90% of the supply is sitting in just a handful of wallets, with one wallet alone holding nearly half. On top of that, liquidity on its own exchange looked very thin, meaning just a few big trades could swing the price in a massive way. And when you add the fact that there's no clear working product yet, and basically no way for traders to short the token, it really looks like a setup where insiders could steer the market however they want. And also, let's be clear, Aster is extremely volatile. Indicators are flashing overbought, and a correction is very possible before the next leg higher. So I would be very careful with this one despite the strong start. And let's move to Avantis. This one building on Coinbase base chain and is just launched in early September. Right out of the gate, Avantis had a bigger drop in listings on major exchanges like Binance and Upbit. That kind of exposure was enough to send it flying. The token pumped about 300% in its first week and hit over $2.50 at its peak. I think that the Avantis story is really about momentum on base. That ecosystem has been hot ever since Coinbase pushed it live, and every time a project gets traction there, people pile in. Avantis added fuel by offering perpetual trading plus tokenized stocks, which got traders excited. On-chain data also shows whales were buying heavy. Smart money wallets accumulated hundreds of thousands of Avant tokens. So again, we see the combination. Hype from big exchange listings, excitement around a new chain, and strong whale interest. Now, short term, Avantis might cool off. Technicals suggest it got overbought fast, but long term, if it can keep growing its share of volume on base, it could keep surprising people. Before we wrap up, let's not forget the older players. DYDX is still here. They've been rolling out new features like social trading on Telegram, and the token did get a little bump. But compared to the fireworks of Aster and Avantis, DYDX has been pretty quiet. Uniswap, the OG of automated market makers, is also steady, is still processing billions in volume, and Uniswap V4 has been a success. But the token price hasn't moved much. It's more of a slow and steady giant at this point. And then we have PancakeSwap on BNB chain. Believe it or not, Pancake is still massive. Earlier this year, its weekly volume actually surpassed Uniswap. The token hasn't gone crazy like Aster, but the platform continues to hold a huge user base. In my view, these older tokens are like blue chips now. They don't move as fast, but they also don't carry the same insane risks as the new launches. So, what does all of this mean? Based on everything I researched, the DEX narrative is only getting started. Now, the key question is whether these insane pumps are sustainable. I personally think corrections are coming. These tokens don't go straight up forever. But the bigger picture is that decentralized exchanges are finally becoming a real force in crypto. And in my mind, this is a narrative you cannot ignore going into the next year. That's it for today. Let me know in the comments, did you catch the Aster pump? Are you bullish on Hyperliquid, or do you think all of this is just hype that will fade away? I'd love to hear your take. And again, don't forget to like this video, subscribe to Captain Altcoin for more videos like this, and I'll see you in the next one.